For those of you guys that don't know me, my name is Hassan. I work with Remax Professionals. I'm a real estate agent. I've been in the industry for about 5 to 6 years now, and I'm just here to share my story and to share some topics of what goes on in the real estate market.
All right, good guys. Hello guys, I'm here, Malici Young. I'm here for 812. I've been a mortgage agent for about a year. I'm coming up on a full year now. I'm just here to speak about the experiences and what goes on in the mortgage industry as well as the real estate industry as well.
So yeah, a lot of people don't really know, or for those that few of you guys may know, real estate and mortgages go hand in hand. Like without a mortgage agent, a deal cannot be funded. Without a
real estate agent, there's no deal.
There's no deal. So they kind of go hand in hand, and we're just going to talk about some topics. So one of the emerging topics in the housing market industry is first-time homebuyers.
Yeah.
So for you guys that don't know what first-time homebuyer is, it's a buyer who's purchasing a property for the first time. And Canada is really good at giving incentives for first-time homebuyers. So I think there's a misconception with a lot of people that are purchasing nowadays, thinking that you have to put that down 20%. You actually don't, you know? So there's about 50% of people that own a home. How they got into that home was not off putting 20% down. It was using their 5 or 10% on a down payment. So like that's the first thing I want to speak about, just the misconception about the down payment when it regards to first-time home buyers. In Canada now, I think as little as like a year and a half ago now, the government of Canada also implemented like before, if you wanted to purchase a property above $1 million, you had to put down 20%.
20%, yeah. If it's
so I think as of 2 years now,
it's over 1.5.
So yeah, as of 2 years now, the government of Canada implemented you can purchase up to a $1.5 million home with less than 20% down. Before you could do that.
Before you couldn't.
So a lot of people, they don't even know that, you know. So it's like they kind of like the governor of Canada kind of gave you more of a purchasing power, without putting down more money, less money, you know. So it's like obviously for me, I own 2 properties. Unfortunately, I put down 20%.
Wow, this was before
before that, but even also just like in my head, I was like, if I had the money,
why not
just put the 20% down? But in reality, it's like
put the 5.
You could put the 10, even 10.
Yeah.
Obviously, you know, you're in the mortgage industry. Like anything less than 20% down, you had to put mortgage insurance.
Yeah, of course.
So maybe you want to touch on that.
So yeah, that's another thing you could touch on is the mortgage insurance. Anything less than 20% down, you gotta have your mortgage insurance. The 5% down I want to touch on as well.
Sure.
Is that you could put 5% down. You don't always have to put the 20% down. 5% down is 5% down. You could go with your 5% down. It might raise your payment a little bit more.
Yes.
But it gives you a better budget. No, like you could budget a little bit better through the years. It lengthens your term.
Yes,
term as well.
Yes.
Well, yeah, that's what I want to touch on.
Yeah, no, for sure. So like just to piggyback on what you were saying. So yeah, a lot of people, they rather put down the 20% because obviously like your mortgage monthly payment will be like cheaper.
Yes.
You know, but obviously a lot of people don't know, like when you purchase a home and you put 20% down, it's not just the 20% down. You still got to put closing costs.
Yes.
So for those of you guys that don't know what closing costs is, this is land transfer tax. If you live in Toronto, you pay land transfer tax.
It's higher over here.
You pay land transfer tax, and you're paying municipal land transfer tax as well. Lawyer fees, that's going to range from anywhere from $1,000 to $2,500.
Yep.
Then you're going to have like the disbursements fees.
Also, it's the legal and notary fees.
All that.
The lawyers. So it's when it comes to like your down payment on a house, it's not just your down payment.
Yes.
You know, it's way more to it. There's all the closing costs. There's even the stress test.
Yes.
You know,
you should talk about that. A lot of people don't know about that.
They don't know about the stress test, you know? So as a stress test is, let's say you get your interest rate is 4%, for example, you got to qualify for a 6%.
Yes.
You got to be able to maintain the payments and everything at a 6% rate.
Yes.
Even though your rate is 4%, you got to be able to manage everything at a 6% rate for a certain amount of time before the bank even accepts your deal.
Yeah.
So yeah, that's a good thing.
Stress test, again, that's a lot of people don't know. It's just like, they just think, oh, I have good credit, I have the money, I can buy a house. It's far more challenging than that. Like I said, like my personal experience, like my sister purchased the property, I think 2011, and at the time, like when she was telling me, like, one day when you go through this stress, you'll understand. Like, I'm downplaying her. I'm like, whatever, sis. You know, shout out to my sister though. But and then when I first bought my property, I bought a pre-construction in Barrie.
Nice.
2020. Me and Mike, Juice
nice.
So we bought together. Yeah, we bought together, and and then it was supposed to close in 2024. And then my second property that I purchased was an assignment sale. 2024.
That's about pre-construction?
Sorry, 2023. You know, I purchased 2023. So obviously I purchased it. I'm making the income as a realtor. Obviously I'm business for self, so it's a little bit different.
Yeah, I know.
That after.
Yes.
And yeah, so now we're in the process of closing my mortgage, and it's like, I have good credit.
Yep.
I make the income, but it's more than that.
It's more than that. It's not just,
you know, they ask you anything, I think over 2K, they're going to ask you where the source of income's coming from. So it's like, I have multiple accounts for different household expenses, etc. And it's like, I'm transferring to myself. They're asking me,
where's this coming
from?
You know,
like, it's coming from my own bank account. Provide 90-day statements. I'm like, send them 90-day, provide 6-month statements. Where's this coming? Okay, pay off this. Like, you know, pay off that.
Yeah, you got to pay off the credit. You got to pay off your debts.
All that type of stuff. So it's like,
a lot when it comes to buying a home.
It's not as easy as people think. So it's like, and a lot of people have help.
Yes.
And that's what I want to touch on. You got to, if you have help, there's always strength in numbers. It's always better to touch on, to like, receive that help that you're getting, because like a lot of people don't have help. Unfortunately, I had to do it alone, and so it was that much more stressful. You know, but I would say, like, if you have help, like, it's always good to buy with family, to buy with a partner, to buy with friends, like, you know, somebody you can trust, because like it's a really, really rigorous like process you go through.
For sure.
You know?
Another thing, even when it comes to buying with family and friends, or even getting the help, I know someone who got a grandparent help, so they got a loan from the grandparent. Not really a loan; it was like a gift from the grandparents.
Gift letter. Gift letter.
You gotta have a letter. Then they gotta see where the grandparent kind of got that money from. Like, it's a process. It's not just something
money trail.
Yeah, you need a serious money trail. You gotta have a certain amount of money in there for a certain amount of time. Like, you know?
Exactly. So
that's just come in there thinking you're gonna transfer $100K out of nowhere,
for sure.
You know?
So I was like, that's kind of what I touched on. And like, when we're talking about first time home buyers, like, there's an incentive. Like, it used to be 24,000 that you got on like a rebate, like first time home buyer rebate, the government Canada, now up to 50K, 50,000. So it's like, there's a lot of incentives that's gonna enable people to get into the market. And like, currently where we are in the real estate market, there's a lot of inventory.
I see right now.
There's a lot of rentals. There's a lot of inventory and a lot of people that can get in the market. And it's like, if you look at it like this, like, you're renting, let's say you're renting for $2,400 monthly. 24 times 12 is, you know,
it's almost 30K.
That's 30. But there's 24, 2 times 4, like 38K, right? Something like that. So it's like, instead of paying 38K monthly to somebody else's mortgage, why don't you take that money, and if you have a partner and you have help, go buy something.
Go put down on something.
Go put down on a condo. The same condo right now is on the market. That's $499. Get it for $450. Put your 10% down. Your mortgage payment is going to be like $1,900. Your condo fees $400.
That's about the same.
But at least you're owning.
You own it. Yeah,
you're owning it. You're paying down your mortgage. You got in at a good time. Like, my rule in real estate is like, you always make money on the buy. You always save on the buy.
Save on the buy.
You save on the buy. When you're representing a buyer, I'll always try to get my buyer a deal.
Yeah, of course.
So try to make them save money on the buy, and then they'll make money on the sell. You understand?
Save on the buy, make on the sell.
Exactly.
Good one.
So like, that's kind of my philosophy. And right now, in terms of, if you're a buyer, if I wanted to get into market right now,
it's the best time.
It'd be the best time because there's so much inventory that I have the leverage. Before like 2023 market, early 2024 market, even 2021 market, things were selling 400, 500K I were asking, even with no condition in offers.
Wow.
You know, because the market was hot. So it's like, if I like this property, I'm not going to wait till you see it, and you might like it, and you might put an offer, and your offer may be stronger than mine. So I'm going to let the buyer know, like, I'm going to come in sometimes cash heavy, no mortgage and no condition, firm right away.
Just one done deal.
Exactly. So we're in a different market right now, and right now I would encourage people to, if you have the help or you have some type of money,
use it.
You should use it again to the market. Get in the market. Get something that is below market value. And I know a lot of people right now, with the way the housing market is, they're discouraged a bit, but
don't be.
It's opportunity.
Yeah,
and you gotta look at it as opportunity. Like, you know, people that bought 20 years ago, they're not worried about where the market is, because they have equity and they already made money. So they're playing with house money. It's the people that bought at the height last year, COVID, 2 years ago, and then now the market's down. You're not going to make money now.
Now, of course, of course. Different times, you know, of course, times are not going to be the same throughout the whole entire,
you know, so that's kind of what I'd encourage buyers to get into. And like in terms of when you like comparing your rent to what you're paying for rent and opposed to what you're paying for mortgage, it's like, it may be $200 more, but it's like,
but it's a big difference in the long run,
because it's going towards something. You know,
exactly.
So
instead of paying off someone else's mortgage, you're paying off your own.
Exactly. So I know there's different payment frequencies when it comes to mortgages. Maybe you want to kind of touch on that. Like, you know, you have your monthly payments.
You have your monthly payments. I want to touch on what a mortgage payment consists of as well. So like for rent, it's like, okay, you pay your rent for the month. You're there for that month. You can get kicked out the next month or whatever the lease term agreement is. But when it comes to a mortgage, it consists of your principal payment.
So want to touch on that too.
Of course, your principal payment. That's what goes. So let's say you borrow $500,000, just for example, from the bank. Your principal payment is what goes down. So let's say this payment is $1,000, just for example. Now I'm only gonna owe $499. Next month I'm only gonna owe $498. Well, then there's more to it, because of course once you borrow money from the bank makes their money.
You gotta pay.
So you gotta pay your interest. You know, if you put less than 20% down, you gotta have your mortgage insurance. That could also be tied into your mortgage payment as well. So it's more than just one payment. It consists of many different things. Also your housing, your heat, your water, all of that. It's like always all in one, you know.
And obviously, if you're living in a condo, you gotta also pay condo fees.
That's another thing too. You gotta pay for the amenities. Like the work that comes around with the condo that you gotta pay for.
Exactly. So a lot of people, like I said, they just think that I'm paying this money to a mortgage. Where did it go to? Like, you know, like if you're on the B side or the private side, you may just be paying just all interest.
Straight interest. That's when it comes to privates. It's
straight interest, you know.
Imagine paying straight interest for a year and you still got your whole entire mortgage.
18 months, you know, and these are situations that happen. So like, obviously, like if I'm a first-time home buyer and I want to get in the market and I want to be fully qualified for a mortgage, what are steps you would, I guess, what are steps you would take to be able to be qualified for a mortgage? Like, what are steps to be pre-approved, etc.? You want to give our
of course. So one thing, as you said, become pre-approved. You got to make sure you have your funds right. You got to make sure the funds is right.
Your down payment.
Your down payment. You got to make sure you have good credit. You got to make sure you're able to handle the stress test. You know, you got to make sure you have proof of everything. You know, your income shows the right amount. You got to make sure you're looking in the right areas. To purchase and have good purchasing power. Also finding a good real estate agent to negotiate on your behalf.
For sure.
You know, stuff like that.
So when you're saying good credit, what would you consider great credit to be approved from an A lender and opposed to a B lender?
To a B lender. So I would, people always think that you have to have perfect credit. You don't have to have perfect credit, because I've seen some people get approved on pretty shaky credit. You know what I'm saying? So on an A lender, I would say 680 and above. I would say about 680 and above. On a B side, I would say maybe 600 and above.
600 and above.
It's a big difference.
Yeah, of course.
But it is a big factor. Like credit is a big factor when it comes to buying a home, you know?
How important would you say it is? Because a lot of people, I don't think they realize how important credit is.
No, it is. Sometimes people could have like a good down payment, but the credit is horrible.
Yeah.
So, you know, it's either you could still get the home, but you're going to be paying a high interest rate.
Yeah.
So you're paying more in the long run because you have a bad credit, you know? So sometimes I would even suggest a client to improve their credit score before even buying it. Like, you know, it's not all about the sale. It's about making the person, remember, this is one of the biggest purchases somebody makes in their life.
It is the biggest.
So, you know, it's not just about, okay, this is a one sale. So I suggest clients, you know, improve their credit if they have bad credit.
Yeah.
Pay off some debts first, and then maybe come back to me in a year or two. And maybe some clients might appreciate the advice that I'm giving them.
They should.
Not just coming for a sale, you know? Like, Malachi doesn't just want the sale. He wants to help me make sure that I'm doing good, you know?
And that's important, you know? Because like I said, like a lot of like, again, credit is something that I think, and even school curriculum should be taught, because like, you know, once you turn 16, it's like, oh yeah, you can get your first credit card. And people don't understand, well, like credit utilization, debt to income ratio, that goes into part when you're getting a mortgage and you're trying to buy a house. These things matter. So like, these are things that should be talked about.
True.
You know, what good credit is, a credit mix, you know, having, you know, like revolving credit, which is a credit card, having an installment credit, which could be a mortgage
or a payment,
a car payment, etc. You know what I'm saying? And just have a lot of, just always like the credit utilization is the most important. Like always keeping your things under 35%. You know,
a lot of people don't really understand that. So, you know, it's good that we touched on that. Another thing I want to touch on is when it comes to interest rates.
Yes.
Lots of people don't know, or the two options that you could go for when you're getting a mortgage is the fixed rate and the variable.
Yeah.
So, personally, what would you suggest more? Fixed or variable?
Honestly, it's depending on my client situation. Honestly,
true.
Obviously, like I said, like this is not my forte because I'm a real estate agent. I used to do mortgages on the side, but like, it's not my forte. So whatever is to the client's best interest, I'm gonna let them know that. But it's like obviously where we're at right now in the market, I would say fixed. You know, but when it was COVID, when the rates were so low at 0.99,
variable,
I would probably say variable. But the only thing about variable that a lot of people don't know, whenever the Bank of Canada moves that rate, their rate's gonna go up. And a lot, you've seen it after COVID. A lot of people were getting rates from like HSBC for like 0.99, RMG for like rates were like 1.99, and they're variable. And then once the Bank of Canada was going up,
their payment goes up.
And so a lot of people went from like, I know a guy who went from like a client of mine that went from like $2,800 mortgage to like a $4,200 mortgage.
And that's a big
guy put a dent in his pockets where it was not sustainable. So he had to sell.
Okay.
You know? So it's like that's a big thing. So I'm glad you touched on that. You asked that question. I would suggest fix for sure.
Okay.
You know, like fix 3-year term. Get a nice good rate. Like right now, like it's not as competitive as it is before. You know, and I would do that. Like I would probably suggest if they can get like a HELOC.
Home equity line of credit.
We'll touch on that. A lot of people that don't know a HELOC is like a home equity line of credit. So you're creating the equity within the home, where you can borrow against that equity in the home. And a lot of people can use it for like debt consolidation. A lot of people can use it to like, you know, to use it for improvements within the home, renovations,
more equity in the home,
you know,
raise the praise on the home, and
property value,
exactly,
as well.
Raise the property value with this home equity line of credit to improve it. Renovations, lots of people do renovations. Let's say a basement renovation, or maybe adding a pool to the back, something like that improves the property value. So that's really good.
That's kind of what I would suggest. Like I said, it's due to my client's situation, but like if it was me, I would do fixed. Like I personally fixed.
You're on fixed.
Yeah, I'm a fixed.
So for those who don't know, fixed is when you lock in your rate. So your payment stays the same throughout the whole entire term, versus a variable where your rate goes up and down depending on the Bank of Canada.
Yes,
right.
Exactly.
So That's the difference between a fixed and a variable rate.
Yeah, no, it's very important to know the two, because like at the end of the day, like you're applying for a mortgage and you'll be in the term for, it could be 5 years,
Could be 5 years,
4 years, it could be 3 years, it could be 2 years, right? So it's it's important for people to know the difference, you know. Like I said, like if like typically if somebody wanted to purchase a home, they call me like, hey, like we're looking to buy a home. Like the first thing I normally do would be like, did you get pre-qualified?
Yes.
So I mean, tell people a little bit of like a pre-qualifying.
Oh yeah, for sure.
Or what a pre-approval.
So if someone gives me a call that they're looking in a certain area, or they're looking at a certain house, like you want to get pre-approved, for sure, I could definitely help you with that. What I'll do is take all your information, make sure that your income is good for the property that you're looking for.
Sure.
Let's find something good for you. You got to submit all your information to the bank, to certain lenders, to give you a pre-approval. So the pre-approval would give you like a stamp. Like let's say you're looking at a house 800,000, but your pre-approval is about 600. So now you know that house is out of range. You know, so you go look for something within your budget, within that range, and you know that, all right, I'm gonna look for something because I'm already pre-approved for this price.
Perfect.
You know, stuff like that. And a lot of things people should know is just because you got pre-approved for 600,000 or 700, you shouldn't always max it out.
Yes.
You know,
yes.
let's just say you got pre-approved for 700,000. Maybe you should only use 500 of it. You know, you gotta.
You never know. Like you may have to, the appraisal may come back a little bit short, and then it shrinks your purchasing power.
Exactly. So it's just more. There's a lot to it, but that's the process I would take when it comes to the pre-approvals.
For sure.
Yeah.
I wanted to also touch on like in terms of like pre-approvals. Like, do you feel like would you ask for the documents right away, or like?
So I would feel out the customer first.
Sure.
Got to see what they're going for. I'm not just strictly on a document. I want to get to know the customer.
For sure.
The client, get to know what they're looking for, their past, their history, you know, of course, their credit, what goes on, you know, married, single, how it's going. And then we'll focus on their pre-approval, what they're looking for, especially in the long run, like not just a short-term goal, you know.
For sure.
Let's figure out what we could do and the best solution for you.
For sure.
You know, the best way, fastest way to get out of this mortgage. Because, of course, no one wants to be in the mortgage forever, right?
That's true. Yeah. Got it. So, obviously, again, there's a lot of people of you out there, you guys don't know the difference between a mortgage broker and a financial institution, a mortgage specialist that works at a financial institution.
Yes, that's another.
So I want you to kind of explain that, because a lot of people is like, oh, my mortgage broker at CIBC. He's not a mortgage broker.
Yeah, he's not a mortgage.
He's a mortgage specialist at CIBC.
Yes,
which you're only limited to CIBC products.
Yes.
That's it.
Yeah.
So you want to kind of give the difference, explanation between a mortgage broker and a mortgage specialist that works at a bank like Royal Bank, RBC, CIBC,
you know,
TD, etc.
Yeah, that's where I come in. I'm a mortgage agent, so I'm able to speak with over 65 lenders. I could It's a broker, so I'm able to speak with over 65 different lenders, find you the best rates, not just one. Let's say you go to a specialist, you're only getting CIBC products if you go to a CIBC bank. Or if you go to a TD bank, you're only getting their products and what they offer. As me, a mortgage agent, I could still get you CIBC products. I could still get you TD bank products. I'm shopping around to get you the best the best rates that there is.
Exactly.
So it's not just one specific rate or one specific bank that I'm going to. So I'm able to shop around all sorts of different banks, not private banks, but not just A-lender banks, like not just the TDs, not just the Scotias.
Yeah.
Those are A-lenders. Of course, everyone would love to go with them, but different circumstances, I'm able to shop around and get you the best price there is, the best interest rates as well.
For sure. No, so that's the difference. Like when I talk to clients and like, oh, we just went to our bank. It's like, I normally try to get them in touch with a mortgage broker because you guys have access to so many different vendors and products and programs that, you know, maybe RBC may not have a business for self program.
That's correct.
But a mortgage broker may have access to a financial institution that has a business for self program.
Yeah, of course.
You know, and obviously let's touch on it like in terms of like, when you're buying a home, you know, there's something called salary income, and there's something called business for self.
Yes,
so for those of you that don't know, like if you work in construction, you're a real estate agent like myself, you have a company, a store, you're on commission, base income, etc. That's called That's considered business for self. So you'd be getting a different product from a mortgage company in opposed to somebody working at, let's say, as a teacher, school teacher.
They have the
salaried income.
Yes. So it's a big difference. Business for self. A lot of times I've done an example of a business for self with the person who I was speaking with who wanted the halal mortgage.
Yes.
They wanted a business for self because they were salaried.
Yes.
So what I had to do was I got to get T4As. I got to get T4s. I got to get notice of assessments.
Yeah. Two on generals. Yes.
I got it. It's not just a regular T4 that shows you the 2 years.
No.
It's sometimes even more than 2 years.
Yes.
I got to make sure that everything lines up. You're able to afford and make the mortgage payment. It's a lot.
Yeah. So, and like I said, a broker would have access. A mortgage broker would have access to a plethora of companies that can assist a business for self, as opposed to, let's say, the client banks with CIBC, so they go to CIBC specialists. They may not have a business for self,
and you might be discouraged thinking that you didn't get you didn't get approved. Well, you just didn't get approved at CIBC only. They specifically didn't approve you. You come to someone like me, I'm able to shop around. All right, let's just say you didn't get approved at this specific lender. I could still shop you around and get you approved somewhere completely different where you thought you weren't able to.
And like I said, like I had a personal experience myself where I went to a guy that I went to an RBC specialist. He used to. I've done a couple of deals with him, like in my career professionally. So I'm like, I like how he works. So I went to him, and he's like, he can get me approved. My file sat on his desk for like a month, and I was like, I'm closing, and I'm closing January 9th. I went to him December 12th.
So
1 week before closing, still no approval. I was like, I can't work. I contacted one of my business partners, mortgage broker. She got me approval like this.
And it's
A-side, like this.
A-side,
A-side, First National.
I know First National.
So it's like, those are the kind of, I wouldn't say pulling the strings, but those are the kind of benefits you have when you're working with a mortgage broker or agent, and opposed to a specialist. So I kind of felt like it was important to touch on that, because a lot of people don't know that process. They just feel like, I'm just going to go to the bank, but like going to the bank limits you, because you're only limited to that specific bank's process.
Another thing I wanted to touch on as well is people thinking that mortgage agents and real estate agents are expensive. We're not expensive because honestly, we get paid from the lenders. So majority of the time, we don't charge the customer specifically. We would, whatever we fund, we would get reimbursed from the lender. So depending on your real estate agent or your mortgage agent, it shouldn't be charging you. So I want to touch a little bit about that as well.
And that's the misconception again, with like the lack of knowledge or not understanding. Like, they do. A lot of people, like it as a buyer too, like you're working with a buyer, they think they have to pay you. When in reality, 90% of the deals are paid from the listing broker, which comes from the seller. So like the seller the listing brokers will normally charge 5% or 4%, and they're gonna pay out the buyer agent. So it's not like, it's kind of like we work for you. We work for free in a way.
We're not working for free.
We're working
for free.
I know not phrase that, because
you think it's free. It's not free.
It doesn't come from my head. It's definitely not free. We're not working for free. But what I'm saying is that we don't charge
you specifically.
We're getting paid from as a realtor, I'm getting paid from 90% of the time the listing brokerage.
And as a mortgage agent, I'm getting paid from the lender once I fund a deal.
I know the B side is a little different, because I know they may have to pay a lender's fee.
Yes, of course. So as I said, it's not always. On that too. It's not. Sometimes like some fees are acceptable. But it depends on what side you're going, A side, B side, especially if it's a private, then of course fees have to be charged. As you said, you're not working for free, but it's not always a charge. It all depends on the situation, the client, the solution that we're going into. It's a process.
Nice, man. So I also want to touch on it, like in terms of like the type of clients that you're acquiring, the type of clients that you're networking with. Like, what are the type of demographics are there? Are they like middle class people? Are they like kids, people that are just finishing university, kids that are just having a family for the first time? What are kind of like your demographic? Or
So my demographic, I kind of aim for first-time home buyers.
First-time home buyers.
Because a lot of people don't have the knowledge.
Yes.
Right? So I like giving them the knowledge. I like letting people, there's a lot of time people are confused. They're scared. They don't really understand it. So I like being the person to come and change their confusion into confidence. Like it's not, they're not scared to buy a home. Now they're confident into buying a home because of me, what I taught them, what I told them, how I explained everything to them, So more demographic, I'm looking for first-time home buyers where I'm able to help them explain the process. And
no, it's important for them to have that trust, but also that confidence, because like I said, it's the most important purchase of your life.
It's one of the biggest purchases in the life as well.
So for somebody to have that trust and like based on a conversation, they can kind of feel at ease, because in this industry, it's personal.
It definitely
There's a lot of emotion that is tied to a transaction. Like a lot of people, they're selling their home that might have been a matrimonial home, or it had been a home that they had their first son, their daughter, like
be a family
home. So like it's very personal. So like for somebody to come to you and tell you their story and for you to understand it, and you're gonna go above and beyond to make sure that everything that they're looking for in a real estate agent, you are.
Exactly.
And it's all about trust. And once you create that conviction for them to trust you, then you're breaking barriers. So it's good that you said that, like, you're looking for first-time home buyers, because a lot of them don't know.
They don't understand. And I just want everyone to know, well, me specifically, it's not just about a sale. I'm more than just about a sale. I'm about teaching you, learning about what you're going through, what's going on. As we said multiple times, every situation is different. Every client is different. Every deal is different. But for me, it's not just about a sale. I rather get somebody to come back a year later in a better position, and I'm able to get them a better deal. And hopefully that, they appreciate that it's not just about the money for me, so hopefully they're able to, who knows, maybe even refer me to someone else. This is a trustworthy mortgage agent.
Because that's
it's not just about the money for him,
because that's the name of our game, obviously.
Exactly.
It's really big on referrals. So the more business you do well, the more referrals you're going to get, and the more repeated business
exactly.
you're going to get.
Yes.
So it's like, it's always good to like get a text like 10 o'clock at night, like, hey, I'm so-and-so's friend. She said you helped her buy a house. Like, I really appreciate, she said she really appreciated your customer service and your professionalism and how you go above and beyond for your clients. So I was wondering if you can help assist me and my husband, or me and my partner are looking to buy.
It's
like, those are the
best text messages to
receive.
Like,
you're getting credit for
your work,
and your professionalism. And I think that very important, like, because like at the end of the day, like, customer service matters.
That's one of the biggest things.
It matters,
a lot. Let's just say my customer service is bad.
No
one's gonna want to come to me.
No one's
gonna have a better rep.
It matters, like, and not a lot of people have good customer service. So like, I pride myself on that. Like, I'm never late. I like to be punctual, and it's like when I'm providing a service, like you said, to me, it's more than a transaction.
More than just a transaction.
So it's not just like, okay, we close, okay, you go on. No, it's like I still check out how's the house.
Keep in touch after.
Happy New Year's, Merry Christmas. How's it going? Touch points every 2-3 months, just to let them know. Like, let me know if you need anything. Like, I've have clients that closed on a property a year ago still call me like, hey, like, we're having problems with this. Do you think you can help? Or I can look into it for you. And it's like the fact that you're reachable and you get back to them in like respectable manner. That also matters as to it. It goes a long way. So if there's one thing I could say, like, the customer service for sure.
I've definitely learned. I used to be a customer service agent for 7 years. So I know the importance of a customer service. I know that when somebody is so angry, or the emotions that come with it, your customer service can turn something all the way around. Like, someone could be, they dealt with someone different in the past, and now they come to you, and your customer service is impeccable.
And they're angry.
Exactly. You bring them down, and you could change the whole situation, and that can go a long way for someone, the customer service is definitely very important.
For sure, No, I kind of also wanted to touch on a couple other points. I kind of wrote it down on my phone. Obviously, another reason I think this is kind of like, it's comical. A lot of people want to look rich, but they're poor. I feel like there's a lot of reason why, like, first-time home buyers are also stay broke is because they overspend.
Yes.
And they spend, they're biting more than they
They
can
can
chew.
shoot. Yes.
You know,
Sure.
so it's like, obviously, you know, like, I want you to touch on like the GDS and the TDS,
yep,
and qualifying for a mortgage, and like what not to do when you get the approval. For example, if you get an approval from the bank, that doesn't mean that doesn't mean you go buy a car.
Yes.
That doesn't mean you go get another credit card.
Yes.
That doesn't mean. Do you want to kind of touch on that, because a lot of people mistakenly think because they got approved that
it's locked. Once you get approved,
So
it's not just locked. No, you gotta, as I said, the stress test is something you gotta be able to afford it. You know, for a certain amount of time. Like, just because you got approved, you can still get declined after you already got approved because your finances have changed. Maybe you lost your job. Maybe you a new revolving credit card, and all of a sudden you have a new credit card or new payment that wasn't factored into the pre-approval. You know, so now you have new payment, car payment
for sure,
or credit card, or you want to go spend $6,000 on a new bag to celebrate that you got approved. That's not how it works. You got to make sure that you stick to it. You stick to your pre-approval. You make sure everything is locked in. Once you get your keys, and then, hey, maybe you want to do something else after everything's already signed. Okay, but before that deal is closed and transactions not completed, you definitely should stick to your pre-approval.
So like, for those of you who know, that doesn't mean you go buy a Lamborghini. You buy a Ford Escape.
No.
You buy a watch. No, you make sure like you close first.
Yes.
You know, because like at any time they can pull the approval. You know, and even when you get a mortgage commitment, like within the commitment, there's going to be conditions. It could be pay off your credit card. It could be like pay off your line of credit. It can be like make sure your taxes are paid.
And if you don't commit to these commitments,
they're going to pull you.
That's a decline. That's not approval. Even though it's thought that you were completely approved, it's not. That's not always the case.
So it's important that I kind of wanted to touch on that, because a lot of people, I feel like when they get the approval, they feel like that's it.
That's not it.
You know,
so that's not it.
I would also talk about maybe the emotional side of like being a first-time home buyer, is like getting in a market where they may be bidding wars.
Oh yes, that's a bidding war as well.
They may be bidding wars, like scarcity, the factor of unknown, not really knowing where to start, how to start, how to get in the market, the right purchase, you know?
Yes, that's another thing. That's a great topic that you brought up. When it comes to like the emotional side, of course, like someone could look at a house, see a house, love the house. You know, be kind of attached to the house and have their mind set on this specific house, not knowing that it's not necessarily locked in. You know, of course, you want to put in a bid on that house. Someone else, let's just say 750K is the price. Someone could come in and say, hey, I'm willing to pay 800 for this house. You know, and I don't know if you have that in your budget. Or, you know, you're attached to this home at 750. But someone else is willing to be like, hey, I'm paying 800. I'll pay 850. Someone else might say, hey, I'll pay 900. And now it's like, you got attached to this home for no reason. And it's crazy.
And I will say, like, as a first-time home buyer, like 9 times out of 10, your first home is not going to be your
forever home. That's
going to be your home. You get in the market, you know, 5, 6 years, stay there. You might not be married. You might just have your one kid. You might not have a kid. And then you guys have your kid. You have another kid. It's okay, now we got to upsize. And it's like you would have made some money from the purchase where you can sell and you can use some of that equity you made plus the money you put in the property and go buy a new house. So it's like, I always tell my clients, like, your first house is never going to be
forever.
Your forever home or your dream home. It's just like, it doesn't work like that.
It doesn't work like that.
Unless you hit the lottery.
And then you buy the biggest house at the first jump, but
it doesn't
good luck on winning the lottery.
It doesn't work like that. And I know too, a lot of people, they come from a lot of family pressure will steer them in the wrong direction.
That's
like,
true.
oh, you should get this home. My agent can get you this home, not really knowing the process it takes to being qualified for a mortgage and how you're able to get a $850,000 home. But you have to understand, like, you know, if you can't be approved for that house, you can't get it. It's unrealistic.
It's unrealistic.
You know?
You got to realistically be approved. And it's a lot of paperwork, a lot of documents, and you got to show that you're able to afford this $850,000 home. So it is a lot.
And it's like, I I would say like a lot of people too, like in terms of like having that family pressure, it's like, you know, sometimes your family comes from money and they had an amazing home when they've bought.
Different times.
So now they expect that same, and it's like we're in a generation now where like one income household's not enough.
Yeah, nowhere near enough. 100K is barely enough nowadays, you know?
5 years ago, 100K was
Would
like,
be okay.
that was like, wow.
It's good. You made money.
Now
it's
even
like
200K, it's like
sometimes not even
it's
enough.
not enough.
So,
you know,
yeah,
so it's like I would suggest like if you're buying a house, like it should be a 2-income house, and it's like
if that's a possibility.
If that's a possibility, of course, and obviously, like if it's not, it's not. But if it's a possibility,
definitely
a 2-income household. But furthermore, like like just understanding like the real estate game is a long game. Your first house won't just
be your forever,
your forever home. You know, you're gonna get into the market. You know, like you're gonna go through some growing pains. You're gonna appreciate each other.
Yeah, of course.
Being on the same roof, but most importantly, like you know, like once you purchase and you acquire this property, but you have for 5 years, 6 years, maybe 10 years.
Maybe 10 years. Yeah,
you should have made some money. You know?
Yeah, property value goes up, equity, grow some equity in the house.
Exactly.
So yeah, definitely.
And it's like at that point, it's like okay, like you're able now to upgrade your tastes, upgrade the home you want.
Yes.
Now that 500 or 700,000 home you bought, now you can go get something for 1.2 in Vaughan or Kleinberg or you know, Richmond Hill and affluent neighborhood.
Yeah.
You know, so it's like I said, like I tell my clients all the time, like this home is probably not. If you're first time home buyer specifically, I tell them like this is probably not going to be your forever home.
Yes.
But just understand, like, it's a process. Like, Rome wasn't built in a day.
Especially, another thing with first-time home buyers is getting your foot in the door.
Yes.
You know, getting into the market.
Yes.
You know, so, like, maybe even you want to go to another home after this. Lenders see that you're able to attain this home.
Yeah.
You're able to make your payments on this home. You know, and it shows, it's giving you, that's another form of credit as well. Like, it's showing that you're able to make these payments and you're able to sustain this home. And so it's definitely
I agree with everything you said right there. It's like you're creating that credibility, but most importantly, you're showing the banks like I made a mortgage payment for 10 years, no issue, no late payments, always paid on time. And you know, obviously I want to touch on what's called a prepayment.
Oh yes, that's another thing too. Yeah,
a lot of people don't know that. For those of you that don't know, a prepayment means like you can pay up to a specific percentage amount yearly on the mortgage without being penalized.
Yes.
So, for example, a lot of banks do like 20% is the most you can pay without being penalized. So that means if your mortgage payment is regularly $2,800 a month, you can still go to the bank and pay.
Okay, let's say I want to put down
$3,000, for example. Hypothetically, if you want to pay $10,000, you're allowed to make that payment as long as it doesn't supersede 20%
of the mortgage.
So
and that's a good thing too, because that lessens your term rate and how long you're going to be in that mortgage. That could cut down a couple extra payments for the year, can cut down a couple years on your mortgage. So that's like prepayment options and privileges are very good when it comes to like mortgages. That's a very good stuff.
And even also too, even to add, like I know like we talked about different payment frequency. I know like doing the accelerated monthly payments. You shorten your term.
So that's accelerated monthly payments that's the one where we do two a month.
Yes.
Or it's 52 weeks, you get 2 payments a month. Exactly. So that's the accelerated payments. It's different once you do monthly payments. Let's say if you do weekly payments. I usually tell my clients to do accelerated, but it all depends on the client, of course. But yes, accelerated mortgage payments, definitely.
Like that's the one thing I like my sister would always tell me, like, I know you're used to making your payments, but sometimes, you know, if you have a good month at work, like,
why not
just put down a little bit more, because like your balance is going to shrink.
And a little goes a long way.
It does.
A little goes a long way.
It does. So like that's also a good thing for people to be aware of, like you're able to do that.
So
that's
a privilege that you're able to do once you get your mortgage. So that's definitely great.
Also, a lot of people don't know about like breaking a mortgage.
The penalties that come with breaking a mortgage.
Excuse me.
The penalties that come with breaking a mortgage. there's some big penalties. Sometimes it could be a big charge. It could be thousands of dollars. Sometimes you could even lose your house for breaking the penalties on mortgages. So yeah, that's definitely true.
Yeah, no, man, it's really important, like, to know this industry in and out before you're just buying. Like, you know, you want to be educated.
You want to definitely be educated, and that's why I feel like it's good to get a good mortgage agent, a good real estate agent that's knowledgeable and that's able to explain everything to you, able to answer all your questions.
Yeah.
And another thing is, like, when you go to banks, you can't call a bank after a certain time.
Yeah.
You know, after 5, you can't call a bank.
Yes.
You got to wait till the next business day. Let's say if it's a long weekend. Mortgage agent, a real estate agent, you can give us a text, you give us a call any given time. We're able to help you.
So that's
all hours of the time.
So that flexibility there, it's like, you know, it's like a one-trick pony in the bank in terms of when you're talking about working with a specialist and opposed to a broker. They're gonna be working for you. So it's like their full attention is on you. They're working with you. They're there whenever you need them, and it can be all hours of the night.
Of course,
whenever you're more available, or you should be more available than a bank. This was like an interesting one, but I realized, like, obviously growing up, like where we grew up is not one of the most prevalent neighborhoods, but like I always used to see like different like ethnicity, different races that like would have homes, and I used to always like ask my mom, like, oh, how did they get a home? But it's like a lot of obviously my mom was an immigrant. She came here to Canada in 1986, you know. So like obviously like came here with nothing, had to work her way up, whatever, scratch and claw for what we got. But I love my mom, and obviously I feel like a lot of immigrants, like, they're able to buy homes faster because they do what's called pooling money together.
That's true.
You know, so you may have a family of 5
living in one home,
and it's like she's making $2,200 a month, he's making $1,500 a month, and it's like they're renting, but they're all putting money aside.
To get something bigger.
So when it comes down to buying, it's like 4 of us is going on the mortgage. We all have money.
We all have
we're gonna be
payment.
And we're gonna break it down. We're gonna chip it down, and it's like I realize that like that works.
It definitely does.
That works.
It definitely
does
work.
that work. Like I have a client that did it that way, and he's like, then he bought a condo, 2-bedroom condo, and then waited for 3 years and pulled equity, and then his sister bought. And then it was the same thing. His next sister bought.
Yeah, it's like a effect.
Yeah.
So I do it, you do it, and like you got to have this good relationship with your family to be able to do these type of things. You know, so that's a great process as well.
No, I feel like the pooling the money, like it goes a long way, because it's like, let's say you're paying low rent, $1,400 a month or $1,600 a month. You have a family of 5. It's like you should be able to save.
Of course, definitely be able to save. Be able to pay all your bills, and put that money aside for when it's time to purchase something. You have a bigger down payment
for sure,
and you know you have a lot of purchasing power as well.
No, 100%, and like also like the sacrifice mindset too is very important. Like to do that, you have to be. It's bigger than yourself,
of course.
You know, you have to be willing to be a selfless individual. You know, not just. But I want this. It's like it's a bigger picture. It's not just a family play. It's not about what you want. Like you may want your own house because you have a girlfriend and you want privacy, but you got to sacrifice certain things in life. Like what you want in life, you got to make sacrifices.
Definitely make sacrifices.
We watch sports. You see LeBron James, like he sacrifices. Kobe Bryant, they sacrifice their personal life. They sacrifice their days off to hone in and be great at their craft. And when you want something,
you gotta make sacrifices.
You gotta make sacrifices. Definitely. So like I feel like having that mentality of sacrifices is kind of another reason why a lot of like immigrant families are able to purchase and buy homes faster
and go together.
It's more a togetherness mindset. You know, so it's like it's something that I wanted to kind of touch on for sure. You know, and it's just like the emergence too of like social media that plays in like this this fake like kind of ideology of like,
yes, that's for
feeling
sure.
like, you know, these like, oh, I can get you whatever house you want, just message me below. And
Yes,
it's like
that's not the
just
case. Like,
not really setting real
real
expectations. So
expectations,
it's
just
like
like
a lot of,
realistic.
and you know, a lot of people in life is like what they hear, what we see, we fall in love with, and we believe, you know,
Yes.
we're gullible.
Yes.
So it's like just understanding like what it takes to own, what it takes to purchase, how I'm gonna get there, and following those steps.
Yeah,
you know?
definitely. Like, as you said, that social media thing for sure. Because like, yeah, you might think that, hey, this real estate agent said they can get me this, but it's not just about the real estate agent. It's about you as well.
Yeah.
It's about things that you're able to maintain, what you're able to afford.
Yeah.
You know what I'm saying? So like, yeah, that's true.
Yeah, no. Obviously, like this is more of a personal question,
Yeah.
but like when you look to buy and you look to purchase, like what are ways you try to implement as a mortgage agent? How would that help you like kind of stay ahead of the curveball when you're
Oh, definitely. I see like how important credit is. So me seeing how important credit is, I make sure that my credit card payment is paid on time. I make sure that any debt is paid on time, my credit utilization. I make sure to have a certain amount set aside every time, you know, like if I'm going to save specifically for this house, though, if I'm looking for this house, make sure to see the differences of what a 5% would look like versus what a 20% would look like.
Yeah,
You know, it's a big difference. You got to crunch some numbers, see what makes sense for you. And as I said, like everybody's different. Every situation is different. But I definitely do sometimes play around with some numbers and see what would make sense for me. Like, what can I afford? You know, what am I able to be approved for? So,
would you buy with like your family? Would you buy with a partner? Like, what would you do?
So I'm actually open to both of those options. You know, if I'm open to buying with a partner, we got to make sure both of our incomes are, you know, we got to make sure both of our incomes are sustainable. We're both able to maintain this mortgage, or, you know, like it's not just me, it's not just her. We both are putting in and making sure that bills are being paid, everything is being affordable.
For sure.
Like that, even with a family as well.
For sure. I had one more to touch on right now. I feel like people don't understand the biggest opportunity right now in the housing market is in Canada right now.
Yeah.
Because like there's so many inventory on the market that like it's giving buyers for the first time the leverage.
Yes. Because,
you know, you can basically buy something for $100,000 off, $150,000 off, below market values. It's like, could you imagine going to Louis Vuitton? And they said you can get this for 30 off, 50 off.
Yeah, no.
So like this is we're in a trying time right now. But I feel like uncertainty creates opportunity. Depends on how you look at it.
Depends on how you look at it, for sure.
If you're a buyer right now and you can purchase a home, I would do it because like you're getting in the market
at the right time
for a steal. And furthermore, like I said, you're saving money on the buy and you're gonna
make money on the sell.
So like I would do that. And obviously, like as an agent, it's the more inventory on the market, the better negotiation power you have. It's like, what are you talking about? There's 5 condos on the same floor.
Take a look,
and this is $50,000 cheaper. So you don't want to sell me this condo for $550 when 405 selling at 420 or 500. Okay, I'm just gonna go to 405. And so it's like you're creating that like negotiation tactic, and it's gonna benefit. It's working. It's gonna work out for
that's definitely
your client. So like man, I feel like we are kind of like in a little bit of uncertainty in regards to the Canadian real estate market right now in terms of like people, the economy, where we're at right now with the economy and stuff. But like I said, like through the test of time, like real estate always been steady, and you're gonna wish you bought now.
Definitely, you definitely gonna wish you bought now. And as Hassan said, you save on the buy, you make on the sell.
So if I can say something, I buy now, because in 2 years from now, you guys are gonna wish you never buy.
Exactly.
And you're gonna be complaining on the sidelines, you know. So
don't be that person.
So yeah, guys, I hope like you guys kind of enjoyed this conversation about like just the real estate and mortgage industry, but furthermore like first time home buyers and things that you can take from this conversation. I was blessed, and I had a good time sharing my story and just sharing my experiences within the real estate market in regards to what to expect as a first-time home buyer. I want to obviously, Malachi, I appreciate you for this conversation, this opportunity, and I'm super grateful and I'm super proud of what you're doing, man. And continue to inspire and continue to spread information, because again, a lot of people in the world, there's just a lot of things they don't know. It's the lack of knowledge.
That's correct.
So if you can provide knowledge where you can help somebody else, you can help a family, you should always do it. Like, it doesn't have to always, like you said, translate in a sale.
Yes.
But as long as you can spread knowledge and awareness on what you're doing for somebody else to help somebody, like that's big. So like I said, I appreciate you guys for tuning in, man. I hope you guys had a good time, and I hope you guys could have took something from this podcast, and you can apply it to real life. So again, I'm signing out. My name's Hassan. I work for Remax Professionals. Again, like I said, I'm a realtor, and hope to see you guys out there one day in the market, and hopefully you guys are looking forward to buying a house one day, and I can be your agent.
Yeah, of course. Yeah. Malachi here. I just want to thank Hassan as well for taking the time out to come here, be my guest on this podcast.
No problem.
About spreading your knowledge, your experiences in the real estate industry. I just want to say thank you everyone for tuning in. Hopefully I see you out there. If you ever need a mortgage agent, just give me a call. If you need a real estate agent, give us on a call. We can be able to help you.